So because Bitcoin is finite, all we have to do is understand the demand side. And as long as governments print more money, which seems like pretty much a certainty, and governments continue to want to increase censorship, then we can see that the demand will continue to rise. Now, we can understand the growth trajectory if we zoom out, and a lot of you are like, oh, Mark, it's just too volatile. It is, yes, but to the upside. So if you look at this path, you can see the projection. Now, it goes up and it comes down and up and down within this band. Okay, then we want to understand the growth trajectory. So I kind of showed you the history, but where is it going? Well, we can understand if we look at store of value assets, places that we park money. We save money in Bitcoin, in gold, collectibles, equities, real estate bonds, and money. So we have your savings. In 2010, that was valued at $387 trillion. 2010, 387. By 2020, this basket of goods was worth $852 trillion.
The financial system is collapsing, currency falls apart, debt explosions, and the disappearance of the middle class are all occurring simultaneously. Mark Moss sees a way out of the mayhem, but the majority of people are stuck there. Hard assets, reliable money, and decentralized technology are the foundations of the burgeoning parallel economy. From energy to sovereignty, from Bitcoin to gold, Mark thinks the next wealth transfer is already happening, and those who grasp the new game's rules will prosper. In this video, Mark Moss reveals the blueprint the elites have followed for centuries and how you can use it to escape the broken system and build generational wealth. For further updates on Bitcoin and the wider world of digital assets, please take a moment to like this video, subscribe to the channel, and enable post notifications before we go any further. Thanks, and enjoy the video.
Before you roll your eyes and turn this off, let me break it down for you why. I'm not going to go super deep in this because I talk about it all the time, but Bitcoin is the first new financial asset in 500 years. Now, when we have a new financial asset, it's a new building block that allows us to build new things that we couldn't build before. When we all of a sudden had steel, we could build things we couldn't build before, like skyscrapers and bridges, right? And now we have a new financial asset. And this is what allows people like you and I to do the same playbook as the 1% are doing right now. Why? Well, number one, we have mathematical certainty. So we have digital scarcity. So we know that the Bitcoin supply goes up, there will never be more than 21 million, and we know the issuance of that. So every 4 years, the issuance of that Bitcoin, that it caps at 21 million, goes down, gets cut in half every 4 years. And so we have this certainty, all right? We have mathematical certainty, number one. Number two, we have scarcity and demand. So because Bitcoin is finite, all we have to do is understand the demand side. And as long as governments print more money, which seems like pretty much a certainty, and governments continue to want to increase censorship, then we can see that the demand will continue to rise. Now, we can understand the growth trajectory if we zoom out, and a lot of you are like, oh, Mark, it's just too volatile. It is, yes, but to the upside. So if you look at this path, you can see the projection. Now, it goes up and it comes down and up and down within this band. Okay, then we want to understand the growth trajectory. So I kind of showed you the history, but where is it going? Well, we can understand if we look at store of value assets, places that we park money. We save money in Bitcoin, in gold, collectibles, equities, real estate bonds, and money. So we have your savings. In 2010, that was valued at $387 trillion. 2010, 387. By 2020, this basket of goods was worth $852 trillion, from 330 to 850. Why? Why is that basket of savings, gold, real estate, equities, why is it getting bigger? It's getting bigger because it's where value is stored. And as the wealth of the world continues to grow, as governments continue to print money, these baskets grow from 380 to 852. Okay, so we can see that growing. Now, if we project that out based off of run rates, based off of what the government projects they'll continue to have deficit spending and so forth, we can project out from 2020 to where these basket of goods will be by 2030, and this $852 trillion basket will grow into $1.67 trillion or $1.6 quadrillion, okay? So then the question is, what percentage of Bitcoin, how fast will Bitcoin continue to grow in this basket? Now we can see in recent history, Bitcoin's been going up by about 50% a year, and we think that will continue for a while. Now that will go down over time, and it will continue to go down. But what we understand is when we understand these technology cycles, using an S-curve, we know the biggest move is right here in front of us right now. So we have about the next 5 years to capture this massive, massive run-up, which is why we have a 5-year plan. Okay, and we believe that by the end of that run-up, in about 5 years, Bitcoin will be about the same size of global store of value assets as gold. Bitcoin and gold will be about on par, about 20 trillion each. Okay, but that's why this is the cheat code. It's the first asset that's going up this fast, and it allows us to do things that were typically only reserved for the wealthy that have a lot of money. Okay, so now that we have this new asset, this new cheat code, what kind of strategy can we deploy? Well, let's take a look. So number one, because we have this growth potential, what happens is historical growth rate equals self-repaying. What does that mean? So we want to, instead of selling assets, we borrow against the assets, right? So as long as the asset is growing faster than the rate of borrowing costs me, then it's basically self-paying. If I have an asset going up by 50% and I can borrow against it at 15%, I have a positive carry of 35%. I can do that forever. Number two, divisibility. With an asset like Bitcoin, I can borrow against small portions of it, unlike real estate. So with real estate, you have $1 million building, you have to refinance the $1 million. But what if you just need 50 grand? But you still got to refinance the $1 million, but I don't want to. That loan is good. I don't want to deal with the hassle. Okay? With Bitcoin, I can borrow against, I can take 5,000 or 10,000 or 50,000 or 100, whatever divisibility that you want.
According to Mark Moss, we are entering a new era in which the old financial system is collapsing and ordinary people can now use wealth-building tactics that were previously exclusive to the 1%. The old-fashioned way is to save as much as you can, work for 40 years, sell everything when you retire, and then pray that your money will survive. However, there is a more effective method that doesn't involve any sales. Due to its digital nature, scarcity, and continuously trading, Bitcoin opens up an effective tactic, borrowing against your assets rather than selling them. The loan funds are exempt from taxes. With no selling, no paperwork, and no market hours, your Bitcoin remains in your name, keeps growing, and you may access cash in a matter of minutes. By using this method, you can avoid worrying about capital gains taxes and market timing. You retain the asset, allow it to grow, and even give it to the following generation. Mark Moss calls this the cheat code not because it's a shortcut, because it breaks the rules of a system designed to keep you stuck. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
Okay, so if we compare this, remember this is the old way. We don't like that. Selling assets for income, paying taxes on withdrawals, depleting principal over time, so you die with zero. Hope you don't outlive your savings. Heaven forbid you live longer. Vulnerable to market timings, 40 years. That's a non-starter. So the strategy, the cheat code strategy, the 5-year retirement is allowing us to keep our assets so they continue to grow over time. They continue to grow for the rest of our life. And even better, when I die and pass them on to my heirs, they keep growing for them. Okay, number two, we can borrow against our assets tax-free. So over here, when I sold my assets to pay for my life, then I had to pay the taxes. Remember, all that money in my 401k was growing tax-deferred. But when I pull it out, I got to pay taxes. Over here, instead I borrow against the asset, and that money is debt, so it's tax-free. I don't pay any money on that. Over here, I never deplete my principal. My principal continues to go up and up and up forever, which means I can pass wealth to the next generation. I don't have to hope that I die earlier than my money runs out. Instead, I can live forever. My assets live forever, and that value gets passed to future generations. It's immune to market timing risk. We don't have to worry about if the stock market's going to plunge for 15 years because we're not selling the asset. We don't need to sell at a high point or a low point. We're not selling it. We're borrowing against it, and this allows us to have a 5-year implementation time frame, even if you start right now. We're going to break down the math for you. So let's take a look at this. Okay, so for the 5-year blueprint, 3 simple steps. Step number 1, start getting some Bitcoin. You got to have some Bitcoin to do this. So strategic accumulation, a couple ways you can do this. Obviously, number 1, just go buy it. We call that lump sum buying. Number 2, you can dollar cost average into it. Every 2 weeks, some of your paycheck can go into it if you want to do it that way, or you can just go buy some right now. I don't want to get into the ins and outs of which one is better. They're both good. It depends on what you're trying to do. Number 2, then once we have the Bitcoin, we use strategic leverage, collateralized lending against that, and then the loans that we get become the cash flow that we can use. Let me break this down for you. I can put up here my starting date, so beginning of this year, 2025, and I can put in how much Bitcoin I have. So let's say I start with 1 Bitcoin right here. 1 Bitcoin, $100,000. Now, in 5 years, this Bitcoin will go up. Now, these are my projections of how much it will gain based off of the past history and what the government tells us as far as money printing will continue. They project that for the next 30 years. Okay, so, and there's also on the calculator, you can go back test it on this on your own. So Bitcoin typically has 3 good years and then a drawdown year. So I imagine we'll continue that. Now, it doesn't continue going up at the same rate, but it also doesn't continue going down at the same rate. So I've modeled that as well. But if I have one Bitcoin right here, it's worth about 100,000 today, and I wait until 2030, 5 years from now, I would then borrow against it $111,000. That's 13% of my total value. I'm going to borrow 13% LTV. I borrow $111,000. $11,000 of that goes into an interest reserve account. It sits in an account and it makes my payment for me. That means I have $100,000 of free cash flow. I don't pay tax on it. I can spend that $100,000 however I want. And what this will allow is every single year in perpetuity for me to pull out $100,000 tax-free to live off on. So if this model holds, and I can break it down for you why I think it does, again, we'll link to that down below, you could have one Bitcoin, about $100,000 today, and in 5 years from now, pull out $100,000 in perpetuity. Now let's compare this to what the traditional financial model is. Remember, half of the baby boomers who have money have about $200,000. They're being told they can pull out about 4% per year, heaven forbid the markets crash, which is about, $8,000 or $9,000 a year. Versus this, the $200,000 would get them $200,000 a year. So would you rather wait 40 years, save up 200 grand and have 800 a month, or 9 grand a year? Or would you rather have 200 grand and pull out 200 grand a year in 5 years? Obviously, the answer is pretty simple.
Mark Moss claims that the conventional route to retirement is no longer valid. Working for 40 years, putting money into a retirement account, and hoping it doesn't run out before you do are the traditional models. You pay taxes on each withdrawal, gradually sell off your assets, and hope the market doesn't plummet just when you need the money most. It is a system based on taxation, dependency, and uncertainty. But because of Bitcoin, you may now begin utilizing a new method that was previously only available to the very affluent. According to Moss, this is the cheat code. You keep your assets rather than selling them. You allow them to develop over time. Additionally, you borrow against your Bitcoin rather than selling it when you need money. Since the borrowed funds are regarded as debt, they are exempt from taxes. Your Bitcoin continues to appreciate unabated in the meanwhile. No tax on capital gains. The blueprint is as follows. Start by accumulating Bitcoin first. Building your stack is the aim, regardless of whether you purchase everything at once or gradually. Second, you use collateralized lending to borrow against it as its value increases. One Bitcoin, which is worth over $100,000 today, might enable you to borrow around $1 million per year, tax-free, for the rest of your life, according to Moss' 5-year plan. The traditional system is completely overturned by this tactic. It is impervious to market meltdowns since you are not compelled to sell during difficult times. Your savings are being preserved and increased rather than being spent. And best of all, this isn't a theory. It's already being used by the wealthy. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content. And as always, happy investing.